Now let's go over to the flow chart just to get a thought process of this, remembering this flow chart is on the desktop, but we're just using it to look at the flow of the forms to get a general idea of the process for the payroll. So we're down here in the employee cycle, and we're using QuickBooks Online. I'm just thinking about the normal cycle of payroll and how we can basically deal with it. So when we have payroll, the first thing that you set up payroll, you have some general options in terms of the time frame. Payroll is going to have its own cycle. So we have the accounting cycle that's on like a yearly basis, a quarterly basis, a monthly basis. But payroll is going to have its own cycle. And because payroll is so complex, we're just going to let payroll have its own cycle. And even if it doesn't correspond to ending at the end of the month, ending properly at the end of the year, we'll deal with that later. We won't mess up the payroll cycle because it's complex. What's the payroll cycle? Well, we normally pay people either weekly, or we pay them every other week, bi-weekly, or we pay them semi-monthly on the 15th and the 30th of the month, or 31st or whatever, or we pay them monthly. Those are the general, most common payroll cycles. You possibly could think of others, but the system of payroll taxes has almost restricted us in many ways to use one of these kind of payroll cycles, and which is another problem of too much regulation. You can't get too inventive with other kind of incentive strategies because they lock them in with these laws and regulations. But so once you have the payroll cycle in place, and if you're using QuickBooks, you would choose the payroll cycle within the setup process. By the way, we have a whole nother course or section on payroll. We're going to touch into payroll in this course, but we can dive way more into payroll. Again, it's a whole specialty area in and of itself, and the complexity will be dependent on how many employees we have and the complexity of the locations and so on and so forth. So then that means that if we pay them every week or every month or whatever, then we're going to process the payroll, let's say on a monthly basis, right? So if we process payroll on a monthly basis, that means every month we're going to have to pay the employees. So normally, if it was a vendor cycle, we would just write them a check. It would be easy to do, but the IRS also wants us to withhold. So that's part of the problem with employees. The IRS is going to make us into their collection agency. So how do we know how much to withhold from the employees? Well, that means when the employee signs up, we're going to have them fill out the W-4 form, which is going to approximate, in essence, how much taxes they're going to pay in income taxes. And then they'll use the tables and whatnot to figure out the withholdings that we will have. And then that'll help us with the federal income tax withholdings. And then we also have to withhold Social Security and Medicare, which are more flat taxes, therefore easier to calculate. And then we also might have state obligations that we have to deal with as well, like a state income tax and other taxes. And we might also have voluntary withholdings, such as benefit programs, like a 401k plan that we can possibly have, or a cafeteria plan, some kind of healthcare plan, and so on and so forth. We could also have other random things, like if there was someone had an ex-wife or an ex-spouse or something, and the court said that we need to garnish their wages and take the money directly out of their paycheck and pay it to their spouse or something. We'd have to deal with that kind of things. And it's just like, why do I have to deal with that as the employer? That's it. That's the employee's problem. What am I doing? Yeah, right. And that's the problem with being the employer, because again, the government tries to make you their enforcement arm, right? So whereas if they're a contractor, that's typically not the case, right? If they were a contractor, then it's like, dude, that's their taxes. What do you want me to do? And well, you have to give us a 1099. They'll say, okay, we'll give you a 1099 to rat them out, to tell them how much they earned, but at least they don't force you to actually take the money from them and be right, because that becomes a lot of work to do, and so on and so forth. So we have to withhold. So that means when we pay them, we're actually only giving them part of the money that they earned. And we're going to have to pay our portion of payroll taxes, which is kind of a matching program, of Social Security, Medicare, and FUTA, Federal Unemployment Tax Act. And then those withholdings that we took out of the pay are going to have to be paid at a later date. This is an accrual component that we have to deal with rather than a cash-based system. So if we're doing this within QuickBooks, QuickBooks is going to force us to do this accrual thing of basically withholding the money, resulting in payroll tax payable and incurring our taxes at the point we process payroll. And then we'll have to pay the payroll taxes to the government, which includes Social Security, Medicare, and federal income taxes, not our federal income taxes for the business, but the employees' federal income taxes that we withheld on their behalf because the government forced us to do so. So that's going to be the normal process for the payroll. But then we're not done there, because then the government wants to enforce us and make sure that we're doing their job for them. We're collecting the money on their behalf, right? And so how do they do that? Well, we have to give them informational returns similar to a Form 1040. So in other words, normally we're used to a Form 1040 with an income tax system in the United States, where we don't actually pay the taxes at the end of the year, at April 15th of the following year when we file the tax return, but instead the government wants the money during the year, right? So in a perfect system for income taxes, what would happen is we pay the government, or they just take the money out of our wages by leveraging their influence on the employer, right? And they just take the money out of the wages. And then when you file the tax return on April 15th following that year, ideally, we wouldn't have any refund and we wouldn't have anything due, meaning we would pay the exact amount during the year. But because income taxes are so complex, that's impossible. So what do? We shoot for a refund. Why do we shoot for a refund? Because if we overshoot, then the government gives us some of it back. That's what the refund is supposed to be. But if we undershoot, what happens? They hit us with penalties and interest. So we try to overshoot a little bit so that the government is happy. We give them a little loan for a little bit of time, and so they're cool with that, and then they give us basically a refund. So with payroll taxes, similarly, we have informational returns, but we have to file those informational returns not on a yearly basis. They make us do it quarterly. So we break the year into quarters, 3-month time frames, and then at the end of the quarter, I've got to file normally, a Form 941. And that's basically just summarizing the Social Security, the Medicare, and the federal income taxes that we hopefully have already taken out of the employee wages and incurred our employer portion, so that we could just say, look, IRS, this is how much the earnings were subject to these taxes. Here's the tax calculation, just like we would do with income taxes, and here's how much we already paid you. However, we're not going to shoot for a refund in this case. We're going to pay the exact amount that we owe, because it's more easy for us to do that because we have more of a flat tax kind of system. So in other words, we do a similar process as reporting the Form 1040 in April following the year. But in this case, we have to do it usually quarterly following each quarter. And instead of shooting for a refund, we should be exact. Hopefully, if everything goes right, it'll be exact. So we have to do those 940s quarterly. And then we have to do the 941 at the end of the year, which is the FUTA tax, Federal Unemployment Tax. So that'll summarize the whole thing. And then we also have to issue the W-2 forms, not only to the employees, but the government. And remember, that's what the government is really after. They're after you being the enforcement arm for the government, collecting the taxes instead of them having to do it. And they want you to rat out the employees, give that information to the government so that the government knows how much the employees earn, so they can go after them for the taxes. And if that W-2 is wrong, they can go after you. Again, why do they have the leverage over the employer? Because the employer wants the deduction of payroll. So do you want the deduction of payroll on your federal income taxes, employer? Yes, we do. That's a big deduction. okay, then you have to do this A, B, C, D. You have to withhold and do all this kind of stuff. That's the leverage. That's how it kind of works. All right. So then we have to also have a W-3 at the end of the year. So that's the full process. Now, again, if you do this within QuickBooks, then QuickBooks will help us to generate all the information, but it'll result in a lot more detailed stuff within QuickBooks, and it'll result in forcing us to do this accrual component. Why is that the case? Because when we pay the employees, notice that even if I don't give them a check stub, I have to give them some kind of information electronically, usually these days, to inform them of the withholdings. So that means that I have to give them something equivalent to the old check stub that we used to get, which is going to tell them paycheck by paycheck, this is how much that you earned. This is what we took out of your paycheck, at least Social Security, Medicare, federal income taxes, possibly then state taxes and any other withholdings. This is how much we're paying you after we took all that money out. And we also need to report that on a yearly basis. That means that we have to have all that information for each employee on a check-by-check basis and a year-by-year basis, which gets to be somewhat tedious. That's a lot of data that we have to have within the QuickBooks system. And then we also have to use that to compile, again, the 941s on a quarterly basis, the 940 at the end of the year, the W-2s, and the W-3s.